Hello and welcome to the mobilegamer.biz digest. I'm Neil Long, and every week I go for a walk and tell you what's happening in the mobile games industry. Here we go. This Sega and Rovio story was by far the biggest story of the week, and it was later updated. So the headline on the site is actually Rovio set for a restructure after Sega acquisition disappoints, which was based on an investor presentation that Sega put out. Some very harsh words in that presentation, and also reference to a restructure at Rovio after the article had done the rounds all day Tuesday. I was made aware that actually there was a translation error at Sega and Rovio in translating it from Japanese to English, and actually the word they meant to use was rebuilding rather than restructure. So I have updated the article on the site to reflect that. So the restructure has already taken place, and I already reported on that back in October 2025 when 40 staff were made redundant. It's probably worth mentioning I double checked with them rather than them contacting me to offer a clarification. Nonetheless, that does not change the fact that Sega said the Rovio deal has failed to create, quote, economic value. Sega is also lowering the priority of free-to-play games going forward. Sega doesn't actually operate too many free-to-play games anyway, so that is largely aimed at Rovio. It seems 100 staff have been moved over from free-to-play into what Sega calls full game development, which is PC, console, premium games. Sega's financials also state that Sonic Rumble Party's performance has been, quote, weak, and that declining Angry Birds 2 revenue has, quote, bottomed out. The company is, however, optimistic on its Angry Birds IP and licensing going forwards. There's a release of Angry Birds 2 in mainland China coming up, a new game in the Angry Birds series coming later this year, and also high hopes for the third Angry Birds movie, which is coming out in December this year. But there's a chart in there which shows Rovio sales declining every year since the acquisition went through in 2023, down from 275 million euros to 181 million euros in the financial year just gone. And they actually predict that will go lower to 158 million euros in the next financial year. So not a positive outlook for Rovio, unfortunately. And Rovio's problems drag down earnings and profitability at Sega overall, as well as problems with Sega's acquisition of a gambling or iGaming company, Stake Logic. Rovio's value was written down by $200 million in Sega's previous set of financial results as well. So, yeah, Rovio may not be restructuring, but the outlook is not good. And, I mean, Sonic Rumble Party's performance being weak, it doesn't really tell the whole story. According to App Magic numbers, it earned like $100,000 last month-ish. Really poor. So I can't imagine that will last too much longer. So yes, there may not be job cuts directly imminent at Rovio, but given the language and projections for that bit of Sega in this financial report, it doesn't look good. Sega is also suspending large-scale M&A activities for the time being after those deals for Rovio and Stake Logic didn't work out too well. So, yeah, like lots of other companies, it seems Sega treading more carefully in the market right now, not taking too many more risks with acquisitions or new game launches, and backing off free-to-play a little bit, which is understandable given what's happened with that Rovio deal. On Monday, I caught up with the Playtika financial results because I'm a fun guy. These actually came out Thursday last week, but I was otherwise engaged. The story coming out of those financials is really that Playtika now sees itself as a casual game maker. 76% of the company's business is now from casual games, and having built its business on social casino titles like Slotomania, Bingo Blitz, World Series of Poker, etc., CEO Robert Anticol now sees the company as casual games first, and was pretty clear that its social casino portfolio is pretty much a legacy asset. The quote on its social casino portfolio is, quote, "We are not making a forward promise of continued growth from here. Flattening the decline and showing early stability is an important milestone, and it matters for the overall durability of the portfolio." So they are not expecting growth in social casino from this point onwards, and they are portraying Superplay and Disney Solitaire as the star performers in that group. The other financial highlights: overall total revenue was $744.7 million US dollars, up 9.7% sequentially and 5.5% year over year. Profits were $125.2 million, margin of 16.8%. Bingo Blitz down, Disney Solitaire up 72.1%. Obviously that game is newer on the market, so that needs to be taken into account. June's Journey up 10.4% year on year. And average daily paying users down a little bit. Average daily active users down 4.4%. UpDAO up 8% year on year. They actually raised their revenue and profitability outlooks for the year as part of that overall pretty bullish earnings report, and also talked about direct-to-consumer as a big growth driver. You may remember last quarter, Playtika said it had passed $1 billion per year in direct-to-consumer revenue. So that category paying off nicely for Playtika. There have been layoffs at Playtika-owned Wooga in the last week. I'm still trying to get details on exactly how many and what happened there. Wooga, as it has done so before, is refusing to confirm the number of layoffs that have happened. But I am continuing to pursue that one, and we'll see what happens. But yeah, Playtika overall, pretty happy with that Superplay acquisition. Without that Superplay, without Disney Solitaire, Dice Dreams, Domino Dreams, I think Playtika would be in quite a bit of trouble. But as it is, pretty bullish outlook from Playtika, and it should now be considered a casual game maker. So there you go.
Xsolla connects developers with the resources they need to build, fund, launch, and monetize their mobile games globally. With Xsolla Webshop, sell virtual items, in-game currency, subscriptions, and custom offers directly to players, while driving up to 5 times the revenue growth. With the industry's #1 webshop solution, Xsolla provides the tools for developers to focus on what's most important: creating great games. Visit xsolla.com to learn more. That's XSOLLA.com.
It is financial season, so let's do Unity as well. Supersonic has not been sold off just yet. Unity boss Matt Bromberg said that process is still ongoing. Ironsource is closing. I think it closed at the end of April. While that Supersonic divestiture is ongoing, it posted a 17% year-on-year revenue rise, mostly thanks to Vector, its AI-powered adtech product. The company said that revenue from Vector is up 80% year on year, which is maybe not a surprise. It's quite a new product, so it probably wasn't raking that much money in last year. It has also just launched UnityAI into beta, an AI prompt-powered version of Unity that the company is clearly putting a lot of stock in. This obviously follows the launch of Google Genie and that whole slightly silly episode where a load of gaming stocks plunged in value because traders seemed to think this would crush game creation and game makers overnight. Obviously, that's not true, but Bromberg did address that in the earnings call. He said that actually UnityAI is designed to suck in world models like the ones that Google Genie can create, and then game makers can tweak them from there. He's framing this as Unity being part of this new wave of AI tools rather than being a competitor. So yeah, total revenue for Q1 2026, 508 million. Overall, up 17% year on year, which is pretty good. Strategic grow, which is adtech revenue, 279 million, up 49% year on year. Big growth there, thanks to Vector. Strategic create, which is engine revenue, 154 million, up 15%. So the price rises and other tweaks it has made to its engine business have resulted in some big gains there. Non-strategic revenue, which is basically Iron Source and Supersonic, was 76 million, down 34% year on year, probably as you would expect, given they have given up on those bits of the business. Adjusted EBITDA, 138 million, margin of 27%. They made a big net loss of 347 million, but they did promise to be profitable by the end of this financial year. So the turnaround story is ongoing at Unity, certainly helped by Vector and potentially also helped by UnityAI. I would guess that Unity is out there telling the market that UnityAI might well be a subscription product for consumers as well as people in the industry. So that might excite investors too, but it is still making a loss. Bromberg and the new executive team do seem to be turning this one around, given the depths of despair it was in a couple of years ago after all that runtime fee stuff. So yeah, the turnaround is on at Unity. As regular listeners will know, last week I was in Madeira for the Games Summit run by DevGam. This is an events company that runs conferences in Eastern Europe and Portugal and other places, Middle East as well. They invited me out there to listen in on the discussions last week. Very nice hotels, very nice place. But if we get down to business, I think the most notable thing here was the discussions around what on earth to do next as the games industry changes all around us. As I noted in the article, which is called Investors and Publishers Want Pragmatism, Flexibility and Games That AI Can't Copy, which you can read on the site now, it was interesting to note the number of consultants, work for hire, outsourcing companies in the room at this event. And more generally, it feels like those companies are getting more and more work as the center of game development fragments a little bit and layoffs happen and people spin out and set up their own shorter term contracting businesses and consulting businesses. One conversation that I've had a couple of times now is how games is increasingly moving towards this sort of Hollywood style model of roaming groups of work for hire companies who come into a project, get it built and finished, and then move on to another, or just running live ops on existing titles. I think most notably for mobilegamer.biz readers was the panel on investment, where Starting Point Games CEO Jeff Hilbert, Agora's Lily Zhang, Oakfin's Willie Kellich, and Crafton Investments' Victor Lee discussed what they are looking for in investable studios and game projects. If you're out there pitching, you've probably heard a lot of advice before, but the new part for me was making a game that AI can't copy, which is a new problem studios will have to face. Imbuing your game with enough of a human touch to make it not only hard to copy from a technology point of view, but also from a sort of human point of view, an emotional point of view. I mean, that goes right back to just making a good game, I guess. But it was an interesting point I'd not heard before. And also, as I say in the article, maybe mobile players don't really care that much about AI-generated clones because, the market has told us time and time again that actually mobile players don't really care, and they'll download a copy of a copy if they happen to come across it. There was a fun bit where they only seem to be half joking, where Hilbert and Lee suggested you can vibe code a PUBG or Fortnite type game in a couple of weeks, and discoverability is going to be a really big problem after that. Discoverability is a big problem and will get worse, so they're right there. I'm not sure about the vibe coding part. Nonetheless, in pitches, they are looking for studios to at least be trying to solve the problem of discoverability by building communities around a targeted player base. So knowing the player you are trying to get in front of and having a plan to build a community around those players is a big part of what should be in your investor pitch. And then later there was a lively chat, as I'd say in the article, between Augusto Simonetta, Enrique Oliviers and Rami Ismail, all industry veterans of different shapes and sizes. They were pretty damning on the dumb money that flooded into the industry in the early 2020s, post-COVID. Ismail in particular advised attendees to build development teams in South America, India, Indonesia, to keep costs down and keep the kind of central creative work in Europe and America. And as ever, the new opportunities that arise in the next few years will be grasped best by small, nimble, flexible teams without legacy, baggage, things that slow game development down. The final line in this is, stay small, nimble and pragmatic, they suggested, and it'll all be okay. Maybe. But yeah, a good event, interesting chat from investors and publishers there. Read the article for more detail and nuance. A sudden flurry of M&A action in this week's Data Digest. Hottest off the press is Sensor Tower's acquisition of AppMagic. It obviously follows Sensor Tower's acquisition of Data.ai about 2 years ago. And obviously also means it is once again one of the only data providers in town. The consolidation of those two things will obviously mean that Sensor Towers and AppMagic's data will improve, but also means there's even less competition out there in this market. I don't know if that's a good thing overall, but well done to AppMagic. It's only been around a couple of years, so good for them. Grand Games raised $70 million. This is the hybrid casual studio behind Magic Sort and Block Out. Yet another big investment going into Istanbul. InMobi has acquired Mobile Action for an undisclosed sum. Those two companies are analytics, advertising, adtech type companies. Mobile Action specializes in Apple ads and App Store optimization. Cohort seems to have pivoted a little bit into UA agents and has raised $7 million from the Rain Group. Another marketing ad tech type company, Smartly, has acquired Incremental. No financial terms disclosed for that one either. There's also a summary of AppLovin's latest financials, which are, as ever, spectacular. Revenue of $1.84 billion in the last quarter alone, up 59% year on year. Net income, even bigger gains there, up 109% from $576 million in March 2025 to $1.2 billion this year. There's also a quick breakdown of a Sensor Tower report on action and strategy games across mobile, but also Steam, where, as you perhaps might expect, the growth is all on Steam, but the monetization is all happening in mobile. Lots more detail and a bit more on Playtika's financials in Data Digest. This week written by Vicky Blake, a prolific games industry writer and freelancer who you will be seeing on the site a little bit more That's it for this week. Thanks for listening. Goodbye.